Hello, this is Mike Swanson. I ran the website wallstreetwindow.com, and the odds are that you're watching this video because you got an email from me telling you it's up. Now, if you didn't get that email, you need to get on my email list so you can get all my future stock trading updates. Typically, I send one out every single day before the opening bell. And to get on the list, just go below this video into the description and click the link there. I want to talk about seasonality in gold and show you what the seasonal patterns suggest that we can expect from the gold market going forward. Gold is something I'm invested in, and so are mining stocks. But before I get to that, I want to just talk about a little bit what's going on in the stock market. As I'm doing this video today, it's like 1:30, August the 3rd. It's Tuesday, really the second trading day of the year. One of the things that's happening today is we're seeing Robinhood stock really take off and have a big gain. It is one of the top gaining stocks of the day, in fact. And it just IPO'd last week. And I think it's instructive of the type of trading that is going on in the market. And that is that last year we saw over 10 million people get into trading for the very first time just through the Robinhood app, and millions more on E-Trade, Ameritrade, Schwab, other trading platforms. Now, what Robinhood does, if you have an account, it will let you see the top 100 most owned positions. And that's something I've been following now for several years. And if you follow it, and then sometimes I'll show it and talk about it. But one thing you'll see is that the people on Robinhood tend to be very momentum-driven traders. They chase what goes up the most in any given day. And if something can go up like for a week and get mass media attention, they will pile into it, form kind of like a herd. And then, when there's so many people that can buy, things top out. That's essentially what happened with GameStop. It's what happened with Bitcoin and other cryptocurrencies, Dogecoin in February. And it happened with AMC just the other month in June. But one thing that has happened with this type of momentum trading is that there are many stocks that were going up like this that people could jump on and it would work. But then around February, a lot of this really stopped working, and there's been fewer and fewer real momentum plays that are working at all. That doesn't mean the averages have not done okay. They have, and we'll get back to that in a few moments. But what it means is that because there's fewer momentum plays, when there is one, even more people pile on, and it can be even more short-lived or fast on the way up too. I would argue that that is what is actually happening with Robinhood stock itself today. Let me show you the chart so you can see what's going on. So, I mean, this stock's only been trading now for a few days. It's up 21% on 52 million shares of volume. That's a tremendous amount of money in terms of market cap. If you trade 52 million by 45, you're talking in the billions. So billions of dollars of momentum trading in this one single stock today. I think that would be like $2 billion. It's a tremendous amount of money. But as I said, when there's fewer momentum plays to do, that means then when there's only one today, there's so much money for people, so many people to pile in, and hence this. So it's going to be really fascinating to see how this stock trades out over the next couple of weeks. How long can this really go up? This is the AMC or the GameStop of the moment, I would argue. So, those stocks went up for a little while and then peaked and really have done nothing. So that's what I would guess this will do. I don't, it's tremendous. I don't know how many more days like this can have, but anyway, that's probably the news item of the day. But part of what's going on when it comes to the U.S. stock market as we can see today, that the Dow is up, but the ARK ETF is down. The Russell is down, but the ARK ETF is very important because it is made up of many of the stocks in the Robinhood Top 100 list. It itself is in the list. It's a fat ETF. It was a red hot ETF last year. It's been lagging since February. You know, the momentum type of trading of stocks that don't have profits has really not been working so well. And the Buzz ETF is also down today. And this also Buzz is an ETF that owns the stocks that are most talked about on social media. So what we're seeing is a theme today repeating, even though the Dow is up, that I've been really talking about for the past 3 weeks. And this is that the internals of the market are fading. I won't get the real internal information until a few hours after the close, but this is indicative of what's going on. The fewer stocks really doing good. Those few stocks are able to push up the Dow, the S&P, but it's causing the weakness in these other more broad-based ETFs that, you know, more individual traders or small traders own the positions in are still weakening. What do you do in this situation? Well, you gotta really, at this moment, you have to really avoid stocks that are on the top 100 Robinhood list. You know, you could buy them last year because they're on the list and just by that do okay. Not anymore. You've got to be in stocks that are leading their sector, and better yet, stocks leading in their sector in a sector that is rallying. So for instance, a sector that is not rallying to avoid is jets, an airline ETF, and there's a lot of airline stocks now lagging the market. So that's what's happening, the broad market. Now let me talk about gold. Gold has been trading in a very narrow range after falling in June. Really resistances in the 1825 to 1830 range. And we retested that. We tested it last week and then Monday, and we're floating right below it. It's really, once we can get above that level, and I think we will, then we can start to see the technical traders and people on the sidelines begin to enter the gold market and start to buy more mining stocks, which will help. So that's something I'm looking forward to. Now, one reason I think it can happen is that the seasonal patterns for the gold market going back decades show that the summer tends to be a weak time for gold, and then things start to strengthen up really now. So let me show you what I'm talking about. This is the website equityclock.com. This is their seasonal chart using data going back to 2004. And you can see seasonally gold would make a peak in May and pull back into June, and then begin to rally really up until then in November, have a little bit of pause in December, and then January and February would be the best months for gold on a percentage basis. But the key thing to think about is that the real move begins approximately now. And this is the seasonal pattern on this chart going back 14 years, but I've seen data going back to the 70s that suggests the same thing. Now, I wouldn't merely make a trading decision or investing decision based on this one chart or one data point, but also the chart itself suggests this is a good time to buy too, to back up the seasonality. Because what happened was we formed a double bottom in March. It was a stabilization time in gold. Gold had been in a correction since the start of August 2020. It faded into March. Double bottom came, boom, it rallied back up above 1900, and then June got hit. That hit in June matched the seasonal trend pattern of a weak June, and then it bottomed, and I believe formed a stabilization phase, much like we saw in March and April, from June till now, still going on. In March, the roughly 1750 to 1760 area was the key resistance. Once that broke in April, we were able to rally, and the bulls took control until June. Now, what I believe is the similarity is 1825, 1830 being the resistance level. And if we can break that, then the bulls can again get in control, much like they did from April to June. Then the question will be, can the bulls rally gold above the 1900 to 1925 range? Because that's what it will take for them to really push forward and get gold to run into the end of the year, which would match the seasonal trend. Now that 1900 and 1925 level is only $100 away. I think it can happen, and I expect it to happen, because we're seeing, as I talked about in the previous video, a peak in the growth phase of this expansion. The rate of growth in the GDP peaked out last quarter. This is why we're seeing the 10-year Treasury bond yield have going down in the past several weeks. It doesn't mean the economy's going to go in recession. It doesn't mean the stock market's going to crash. It means we've seen the peak of the growth rate, and how people are adjusting to that. And one thing that's happening is that when the rates for bonds go down, it's very difficult for people to solely use bonds as a safe haven, especially if you've got a lot of money or you're an institutional hedge fund or investor or endowment, and hence a look at commodities and precious metals as a safety play. So investment demand is what I think is going to continue to really drive gold up for the rest of this year and the years to come. And so I see right now is frankly a good time to be buying gold, silver, and mining stocks. If you bought gold, you could buy now and put a stop loss order under the low of last month and have a fairly tight stop, and then be able to tell yourself, I'm going to see if we can break 1925, in the next 2 months. And if we do, I will hold, and I'll be happy, and may even add on. And if we just hit 1900, and then don't go through and come back down to where we are now, then you say, okay, it's just consolidation. But I think we're heading for a good run here. And another reason why is the 200-day Bollinger Bands are narrowing. Gold essentially has been already in a consolidation phase now for almost a year. 1900 to 1950 was the peak in January, the peak in November, and so forth. So you're already in a long, drawn-out consolidation. It's not going to last forever, much like the one in 2019 when gold peaked around 1550 and then broke out in January of 2020. So interesting setup, not just for a short-term trade for a few months, but as an investment buy point. So this is why the seasonality is an interesting thing to look at, and it does project that this is a good buy point. But I think the charts and the overall long-term charts too, not just short-term, tell us the same sort of thing. I believe in looking at daily charts, weekly charts, and charts that go back years to make decisions, not simply the daily gyration of the moment. That's what the momentum traders are looking at. And when they see really only one momentum play to get on, Robinhood stock, Hood, that's what they get on. But that's not a good way to buy and hold. I like to buy and hold and get dividends. And then you don't have to think that hard about, what you're in. And it's just easier that way. And frankly, when things move up so quickly as Robinhood does today, you got to have a plan to get off. And too many people do not. And frankly, if I bought Robinhood at this moment, to get off of it, when do I take my profits? you know, this chart here doesn't help. I would need to be looking at a chart going back several days and then figure it out. You know, when we do that, we see it broke $38 this morning. That drove mass buying in, but now we're having trouble at 47. So what do you do now? You know, if I bought at yesterday or on the open, I could put a stop loss under 43. If I've got a short-term trading orientation, which you have to have if you're trading, you know, off of daily, hourly, or 30-minute charts, and then you see, can we break 48 in the next couple of days? And then maybe next week we can move the stop loss up if you really believe in the position. But, you know, can you believe in the position? What is the price to sales ratio of Robinhood? What is the PE of Robinhood stock? You know, these are all questions. There's no dividend. So what's the good fundamental price that makes this stock a bargain? Well, it's a type of analysis that is necessary to do if you want to hold something as an investment. Day trading, jumping in and out, that's a different story. Then you need charts. But even then, the data of just looking at a price gyration, you know, up, down, that you get on the app is not enough. You need to be looking at charts like this. This is on stockcharts.com. It's a 30-minute chart. Even better, use some indicators and look at the money flows, overbought, oversold situations, and so forth. That's how you do short-term trading. So all that said, I think we covered a lot of topics today, and it's good to talk with you about what's going on in the markets. The big news that most traders are following is Robinhood, but what I'm following is the seasonal gold trend. Now, if this is the first time you've seen me on YouTube, what you need to do is click the subscribe button and then click the bell next to that button. That way, YouTube will notify you as soon as I put another video up, and I'll be talking with you later on.